It's called Your Take, a chance for you to ask questions right to our experts. And our expert today is David Hall with Hall Financial, talking about the interest rate hike. Of course, the Fed increasing it 1/4 percentage point, expecting even more of an increase later on in the year. So how does this affect your buying power? David, it's good to see you. Thanks for joining us. Our first question comes to us from Rochelle. And Rochelle has a question: when will it be safe, viable, sensible to buy a house again? David, lots of people want to know that.
It is right now. I think it's very viable. And the short thing is that even though interest rates have gone up, they're at the same level they were at basically in 2019. So certainly a great opportunity right now to buy a home. You got to remember, we're coming off of the lows of all lows, and we're at a territory right now that's very affordable and advantageous historically for folks that are looking to buy a house right now.
Yeah, so interesting. Even though it's a rate hike, we're still talking about 2019 levels, David. So interesting perspective there. Our next question comes to us from COVID Mask Force, asking this: we're looking for a new car in a few months. How much will this affect the payments? That's a good one. David.
Well, they're going to go up a little bit, but I don't think it's going to be anything dramatic. The Fed talked about maybe guidance of raising 6 times. At the end of that, it's going to be a little bit more. But in the short term here, over the next couple of months, you're not going to find that the pricing or your payment is going to rise substantially. It's going to be a little bit, but nothing to worry about in the short term.
Yeah, so many people struggling to see if they could get a car. And then when they think about getting a car, they have to consider the interest rates here. And so that is a good consideration to have. Our next question coming to us from Denise. David, Denise is asking, at this time with everything going on in the world and prices of everything so high, I'd have thought the Fed would have waited another quarter. The raise is going to hurt a lot of people. David, what are your thoughts on that?
Well, Denise, I think it's an interesting point. I think the reality is that if the Fed had not raised, that the markets would have been extremely surprised, and that's usually not good. So I think in the long term, with them trying to curb inflation and also bring down the overall pricing of a lot of goods and services, it's probably a good move that the Fed did that, and I think they're going to do it again at their next meeting.
All right, buckle up. The interest rate roller coaster does continue here. David, last question coming to us from Shayna. Shayna's asking, hey, the Fed is raising rates to try to slow inflation, but how effective can they be when most of the inflation right now is caused by a lack of supply? And we've been talking so much about that lack of supply. David, talk about how that affects this equation.
Yeah, it is. And there are a lot of factors that cause inflation. And I think you have to look holistically. Historically, when you have inflationary pressures, raising interest rates is the answer to that. So I think this is step one of a wait and see approach by the Fed. They're talking tough about 6 rate hikes. That changes over time. So I think for sure we'll see another one unless something crazy happens where we get a second hike. But of course, they're going to keep an eye on everything. But it's a good question.
All right, David, thanks for your perspective today. And all of our Fox 2 viewers, if you still have a question about the interest rates and what's expected to happen in the future and how that affects your buying power, join us on Fox 2 News on the streaming channel coming up Friday at noon. Just go to the Fox 2 YouTube channel. I'll be hosting an hour-long chat with David Hall where we'll be answering more of your questions. So join us Friday at noon on the Fox 2 YouTube channel. We'll see you then.